Hello, I'm Lelda Smits for Modern Wall Street, and joining me here on the trading floor of the New York Stock Exchange is Stephen Guilfoyle. Stephen, great to speak with you again.
Oh, thank you. The pleasure is all mine.
Now, we have just seen one of the worst quarters on Wall Street in about 4 years. How has the sentiment been like here on the floor of the New York Stock Exchange?
Well, trader sentiment, it's been somewhat on edge, you could say. I mean, now that we trade algorithmically as opposed to when humans actually traded each and every share, market swings are much more violent. So the intraday swings are largely technical, but when things get going, they really get going. And that can have some people pretty nervous as they watch their money fly in and out of their accounts.
Okay, now today is of course the first day of a new month and of the last quarter of the calendar year. To what extent do you think the worries of the last quarter are likely to trickle on to the coming weeks and months?
Oh, they're going to keep trickling. There's no doubt about that. We still have all the issues that we had, and throw in expectations for a lousy earnings quarter. The third quarter is supposed to be pretty poor when it comes to earnings, and the fourth quarter might not be that much better. So we have a pretty lousy 6 months ahead of us as far as earning money goes. What happens to stocks could or may not be a horse of a different color, you might say. We really need the Federal Reserve, find out what they're going to do. We'll hear from 6 Fed speakers tomorrow after the jobs number. So tomorrow's a day that we'll get some important data backed up by a lot of Fed policy talk.
Okay, now you mentioned the Federal Reserve. Everyone is, of course, always talking and speculating about what they're going to be up to next. In September, they kept rates steady. We've got decisions coming up in October, also in December. What are you expecting from these meetings?
I would love to see a small interest rate hike. I think we need to get the ball rolling. I don't expect to see one, however. I think their hands are largely tied. The economy is not really strong. There's pressure on them globally not to raise interest rates. And there's pressure on them probably from the powers that be, the political powers that be, to sustain this debt supercycle that we seem to be stuck in, this era with no inflation and no growth. So I don't know if they'll be able to pull it off, but I would love to see it.
And do you think October or December?
Well, I don't think they can do it in October. So I'm going to say December, but I don't know if they can do it then either. I hope for an October hike. I don't have hopes for a hike this year.
Okay, and final question, Stephen. Of course, you mentioned those all-important jobs numbers coming up tomorrow morning. What are your expectations?
Well, the consensus is around 202, 203,000, but the models I follow are a little lower than that, so I'm going to go out and say something like 180,000.
Okay, well, we'll certainly be watching out for those numbers, as will all traders everywhere. Thank you so much for speaking with us again today.
Oh, thank you very much for having me.